Hello everyone, this is the second episode of my 2026 Portfolio Challenge series. In this episode, I'll go a bit deeper into how I value stocks, which is a bit different than how other people do it, and some of the moves I'd made during the past week. Disclaimer, this is for educational and entertainment purposes only. I am not a financial advisor and this is not financial advice. This is all done on a paper trading account and these are all simulated trades with no real capital at risk. In the itinerary today, I'll talk about how I value stocks. I'll use Meta as an example. I'll show some of my TradingView settings, and this is going to be pretty simple and everybody can have these settings because I use the free TradingView. I don't pay for it. Then I have the 2026 main portfolio changes, the moves I made this week, the value portfolio changes. I'll talk about Celsius and Ford. I had some mishaps this week with them, partly Alpaca's fault, partly my fault. Then I have the meme stock portfolio with Thinkorswim. I'll show you how I use Thinkorswim in general with all the options trading that I'm doing here. So let's get started with how I value the stocks. I use the formula of income times PE ratio, where the PE ratio is what I expect it to be, not what it actually is. Then I add to that the net debt, it should say net, not total, which is the net cash minus the total cash minus total debt. And then I divide all that by the share count. I then use the PE ratio. So my PE ratio is based on revenue growth. And then I compare it to stockanalysis.com. I'll show you that in a second. And I also like to check the chart on TradingView just to make sure everything fits. I like to make sure that historically it's got the trend going in the correct direction. I also like to read about the companies, but that's going very in depth into the companies. So let's just show you how I do this. I'll use Meta as an example. So here's my spreadsheet. I have this very, very simple online calculator here. And here I have Alpaca. Let me open up stockanalysis.com. I like to get all the data from Stock Analysis. So I go to Meta. Sorry, I was saying using Meta as an example. Overview first, because I like to know the market cap. So the market cap is 1.65 trillion, 1.650.000, 1.65 million. The number of shares is, shares out 2.52 billion. So that is 2520. I hope I did that right. So financials, balance sheet. I like to go to quarterly, even though it doesn't matter for this. Cash and short-term investments. I just copy this. Control-Shift-V. And then the debt, total debt. And this should be the same exact as that. Yeah, that matches, that fits. I could just take this, but I prefer not to do it this way. I prefer to do it manually just to make sure I'm not missing anything. And then I look at the operating income, which should be here. Yeah, operating income. 80 million. And then, so for the PE, this is more of an art than it is science. So I look at 26% growth basically year over year for the past few quarters, 20 to 25%. I'll give that a pretty decent 35 PE, I'd say. Yeah, that tracks 11, 18. Let's just see what I used previously. So I have them at 950 in the expected exit. That's not necessarily the value I give it, but that's what I'll exit just to be safe. Just to put that into perspective, what PE that is, that's probably like a 30 PE. Yeah, that's almost exactly a 30 PE. Let's see where it is currently. So currently the core business is doing 20 PE. It's a 20 PE. And the overall business is sitting at a 28.85 PE with a forward P of 22.18. So yeah, I think a 30 is decent. And let's see what the forecasts say. As I said, I compared to Stock Analysis. My range, my value has it almost exactly at the high, and my expected exit is between the average and the high. I do think it's going to reach the 950 this year. So that's basically how I value the stocks. Let's just go here. Let's go Meta. So I keep it on the daily. And I have the RSI. I don't have volume. I don't use volume at all. And then I have Altimator's Bottom Finder. I saw this on Reddit from GameStop Reddit, and this is pretty cool. Meta doesn't have it really, but here I'll show you on he built this for GameStop, so it works on GameStop. But it turns yellow when it's expected to do a turnaround. So like yellow, 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 and then it starts being yellow and it flies up. So Meta doesn't have this, but that's just what this thing is. Let's just see. Okay, it's right in the range. 950 is going to be up here, which is higher than everything else, but it does look like it's trending higher. Meta's had a really good run the past few years. So yeah, as I said, that's basically what I do. And let's open the PowerPoint again. So as I said, I find the income, I find the total debt, I find the share count. It's a simple formula, and then it's kind of just messing around with the PE and finding something that you like. And now for updates. So my 2026 main portfolio. So some of the moves I made, I started with the free cash. I started doing Rivian cash secured puts, which basically means I'm selling puts using my cash as collateral. That's just because Rivian has very high IV. My Celsius roll, that got messed up. I'm not used to Alpaca. That just got messed up this week. My stocks, some of them got called and some didn't. Some actually did roll. I'm confused with what happened. It told me that it went through, but it didn't. This also happened in the GameStop portfolio, the meme stock one. Only one of them got rolled, which was really weird because when I was doing it, it said that the whole order went through, but I guess not. I rolled ELF. So ELF kind of blew through it. I'll go over that in a second. So I had to roll out, up and out. And then Hood, I put a new call because it dropped back down to my fair value. And Nike, I just put in a new call because that one expired out of the money. So let me go over this one by one. Let's go over Rivian. Okay, so you can see my 2026 portfolio. It's up 1.7% since this challenge began. Yeah, so as you can see, I have the Rivian 1 week out. I put it at the 18 call. So how does this look in Thinkorswim? So what does this look like? So this side right here is the calls. This side right here is the puts. I decided to do the 18 put just because that's around 1% of capital. So this will give me 1% for the week. And it's pretty far out of the money, as you can tell. It's Rivian's at 1922. So that's a pretty big drop. And, worst case, I just roll it down and out. So let's say it reaches 17 and a half. I'll just roll it down to 17. I don't want to have Rivian right now at this price. So I'll just keep rolling it down and out until I can safely exit the cash secured put. And hopefully it'll just keep giving me on my cash 1% weekly, or between 0.5% and 1% weekly. Other changes. So the Celsius thing, we can go to Celsius. As you can see, I had 200. There's only 100 left. Half of that got called away. Half of it got rolled to the 51.67. So that's in this portfolio. The other portfolio did get called away. I'll probably rebuy into it because Celsius is super undervalued. I think I have Celsius going all the way up to, so Celsius here. Yeah, I have them going all the way up to 70. So even at this price of 52.9, where we entered at 48.45, it's still 32% undervalued, which is insane. Yeah, Celsius it's gonna do really well. And then the ELF. Yeah, so ELF, I believe my previous call was to 82. Let me check. I actually tracked this. So my previous ELF call strike price was 82. I rolled it up to 83. It's at 87. I do think it should be going up, but not as quickly. I have ELF at expected exit of 87. So this is basically fair value right now. So I'll roll it this week. If I need to, I'll roll it next week. I think I'll just exit when my rolls roll up to 87. So that's ELF. Hood, yeah, Hood just dropped. Hood was at 122 last week when I bought it. I put a 122 call, I think. No, I didn't. I put a 127 call. This week I have a 120. Sold a 120 call for really good premium. It's at 115, which is exactly where I have the fair value of Robinhood at. So, so long as I can make 1% weekly on Robinhood, that's amazing. I'll keep doing that. Finally, Nike. Yeah, that's just a new call, just like Hood. Nike 65. Last week was a 67. This week I upped it to 67.5 just because the stock moved up to 65.92. That's around the 20 delta. Let's see, 67.5. Oh, it's a 32 delta. So that's this portfolio, the value portfolio. The Celsius got called away here. I'll rebuy into it. And then, so I had a mix up last week. In the deep value portfolio, I had Ford. Or I didn't have Ford. I wanted to buy Ford. I had FWID or something weird for some reason. Again, I'm not used to Alpaca, so these mistakes will happen at the beginning. And in general, I think I might just I don't like that the two value portfolios are combined into one Alpaca. I think I'll just restart that one. Maybe this week I'll restart it and just do the my choice value, and I'll keep tracking the PE one here because I'm not doing any options calls or anything. So just a basic Excel should be fine. So what happened was I bought Ford, which I meant to buy last week. I bought it at a higher price than I wanted to buy at $13.45, and luckily it did go up to $14.11 on Friday when I was checking the accounts. So I sold it for a decent profit of almost $600, and then I sold it, so I obviously have more cash. In my choice value portfolio, Celsius got called away at 51, which is, I guess it's fine. I'll just rebuy it at 53, so I just skipped out on that move from 51 to 52.9, whatever it is. And Nike, I did the same roll as the previous one. You can 67.5 this week. So now I have 25,000 in cash in this portfolio. I'll just rebuy Celsius with that. Finally, the meme stock one. So yeah, this is just GameStop. So for GameStop, I tried to roll it to 22. Yeah, these mistakes will happen when you're dealing with deep portfolios at the same time. But yeah, overall, it's doing pretty well. That's the only update I have for GameStop. I wanted to show how I do the GameStop ones on Thinkorswim. So I just go here. In my settings, I have the 12 strike. I generally like to go at the max pain and then add either 50 cents or $1. This week's max pain was 21. And then I wanted to add a whole one because volatility increased. As you can tell here, 63.15 compared to the other ones here, which are much lower. So I just wanted the 1% per week mark, which would have been 22. If I rebuy on Monday, it's going to be significantly less, but I'll keep it at 22 probably, just because the momentum is going up with GameStop right now. So yeah, I didn't make anything on the cash secured or on the covered calls for GameStop this week, which it's not a big deal, I guess. Oh, I wanted to show where I can find max pain. GameStop, by the way, is the only stock I use for max pain because historically it's actually been pretty accurate. So you go to chartexchange.com, you enter GameStop, you go over here to max pain, and then GameStop has the GME1, which includes the warrants, and it has the GME chain. So obviously I'm using just the GME chain, the GameStop chain, and here you can see the max pain by week. So I like to go 21 and then either plus 50 cents or plus $1 based on the volatility. So this week I'm going to go up to 22. These will update as time goes by. As GameStop goes up and more people buy and sell calls, then it'll adjust. So we went over value, we went over the portfolios, we went over my Thinkorswim. Yeah, as I was saying on the GameStop, you can see it's in a kind of upward trend. This is just the regular Friday sagging, I think. I do believe it'll go up to maybe 22 and a bit, and then it'll drop back down. I have the fair value at like 21.5 or 22 currently. Thanks for listening. Have a good week. See you next week. Bye-bye.